What's going on, everybody? This is the blockchain backer bringing you the latest cryptocurrency news and analysis. Today, we're taking a look at the Bitcoin price chart. We've had some interesting things happen over there on the inflation narrative that I thought we would talk about today. Taking a look at the Bitcoin price chart, taking a look at the altcoin market, we could see prices haven't changed much since yesterday. You could see, hey, there's that 100-day moving average over there on Bitcoin. Price is still yet to clear above there. We have crossed it 2 different times yesterday and today, unable to really get a break through that price level. XRP has backed up off of those higher prices from yesterday at 75 cents, now at about 70 to 71 cents, kind of setting itself up on whether or not it's going to continue in the range or break above the range. I'm not willing to sit here and put my stamp on which one's going to happen at this exact moment, as we're in the range and ranges can be chaotic. Still just going to sit back and wait on this thing. Again, my biasness is that this market is still going to go into a bull market. What's going to happen temporarily in the next day or two within this range? Ranges are chaotic. We're just going to have to wait and see. Still, super happy to see that this low did hold way down in here. That's something we've been monitoring for weeks, if not months. Things are looking great. We're just pausing for a minute and waiting to see how the range break is going to happen. Altcoin market still doing exactly like we've been looking at. That area still holding the double tap, back test, bull flag, breakout, all that good stuff. This level is still holding. Optimistic to see that. Waiting to see what's going to happen temporarily within this price area. A couple of those other coins that we've taken a peek at, Ethereum Classic, looking at IOTA from back in history when we did end up going into the final big surge of the cryptocurrency market that happened for IOTA right in here. When we compare how these are looking, these structural setups, everything looks completely identical in this market to how it looked last time before things started taking off. Big question is right now, if you're going to say this is the whole correction structure, this is the whole correction structure, are we kind of approaching this moment right here? Or are we more in this kind of moment right here? So it's really hard to tell right now in this range, but still everything looks fantastic. What could you expect if it was only in this area right in here is that there would still be a little fall, more consolidation, and then the big breakout. Or if it's already in here, well, you know what? Good luck. That's never going to happen again, or at least not until the next bear market if it wants to get that low. But just give this a couple of days to play out, and then we can kind of draw more information. I think if we started to see like Ethereum Classic start to break out into higher pricing, we have some data to go with and say, okay, now we can kind of compare things. So long as we're stuck right in here, same thing goes for the rest of the market. The exact location that we're at right now, it is really just a wait and see. But if we get a break in either direction tomorrow or the next day, or just over the course of the next days, maybe even today, then we'll have more to talk about. But as we wait on this, it is just that it is waiting for me. But something has happened over here with the US dollar currency index and has happened to the narrative and what's going on in regards to inflation. We could see that the dollar has been moving down drastically over the course of the last several days. I saw lots of mainstream analysts out there saying that this was going to break up higher and that this was a head and shoulders. It has invalidated that as a head and shoulders at this point. My opinion has been that this is Wyckoff distribution, but really I just call it an ABC correction. And that my opinion has been that the dollar is in a massive correction in here, heading all the way back down to 78 to 80. That's been the messaging I've been going with since I ever started my YouTube channel. And the reason I put so much focus on this is that when we looked at the last time that the dollar had this big fall right in here, that was the 2017 cryptocurrency bull run. This fall right here so far, that's been the 2020-2021 bull run. And my expectations have been that this level will break and we will continue to go all the way down to here. And for those listening in a car, that would be 78 to 80 for the US dollar currency index, with us currently sitting at about 92. But either way, what's the narrative change that has happened in here right now? Well, as you all know, inflation has been a big talk among the masses now. During the entire year of 2020, it just wasn't even talked about. It was completely ludicrous to us on this channel that it wasn't talked about because we were printing trillions of dollars, but it was not mainstream to worry about inflation, which was amazing for us over here in crypto because we could see it and we're like, look, there's going to be inflation. And sure enough, it came and crypto rose. But Jerome Powell has been stating that the inflation will be transitory or temporary, right? These are the things we'll see for just a short time. We've even seen Cathie Wood out there saying that deflation is a bigger risk than inflation. So it's been this messaging and this confusion. Are we in inflation or are we in deflation? Or is the inflation that we're seeing just temporary due to supply chain hiccups like we've shown on this channel, where container costs are skyrocketing? It used to be $1,500 to get a container. Now it's $3,500 to get a container. It used to be $1,500 to ship a container. Now it's $10,000 to $20,000 to ship a container. Is all the inflation that we're seeing just temporary supply chain hiccups and factors of this and that, or did it have something to do with more permanent because of all the money that was printed and all the other variables? Well, the Federal Reserve has been stating that it is transitory without elaborating too deep into what that actually means, with everybody making the assumption that it means this is just temporary. This will all go away at some point. But you have critics out there, such as Peter Schiff, who's a massive gold supporter, stating these are not temporary. This is permanent, and it's going to get much worse. And yesterday, Jerome Powell came out and said that inflation could be higher and more persistent than expectations. Now, you ask anybody in crypto if they thought that, duh, we've thought that the whole time. Federal Reserve Chairman Jerome Powell said that inflation could be more aggressive and last longer than central banks' expectations. Powell, fresh out of a two-day meeting with top Fed officials, told reporters that while inflation could be more intense than previously thought, indications are that it will settle back down in the future, and the Fed is not ready to begin talks about raising interest rates to mitigate price increases. And well, as the dollar already started to roll over, as the dollar's all indicators were showing bearish divergences already showing up, with the relative strength weakening, with the MACD already in rollover, well, now the dollar's really starting to get some move on it. But we see that the narrative has now changed. I watched some of the things that he said, and he was talking about how transitory can be thought of as temporary, and that they never meant to say that the inflation would go away, and that it is likely that the price increases that we are seeing are permanent. And by transitory, he means that we won't see this level of inflation happen for forever. So this growth rate of inflation is only temporary, but the price increases that you're seeing are permanent. And so that's a big shift in what the expectations are for people, right? We watched from the first half of 2021 people really getting on that inflation train, right? That inflation idea and thinking that things were going to get really bad. Then you watched kind of crypto pull back. You watched a lot of fear happen over there in the stock market. And you had, Kathy Wood saying deflation's a bigger risk. You have a lot of people saying that the US dollar currency index is going to break up higher. We kind of paused that whole inflation stuff and whether or not that was going to be permanent or not permanent. And then now we are now in full blown narrative. Inflation's going to be a problem. And the inflation that you're seeing right now will not go away. Maybe the inflation will slow down at some point and not be rising as rapidly as we're seeing, but it doesn't mean that the price increases you're already seeing now are going to go away. Those are the new prices for those goods, and those are permanent. Now, permanent's a strong word, right? One could argue that eventually the stock market's going to crumble. Eventually the economy is going to crumble because we're built on a house of cards and an enormous amount of debt, and eventually everything is just going to fall apart. And when that does happen, you would expect goods, services, everything, prices to massively drop during that time. Home prices, all that kind of stuff, right? But so long as the economy or the stock market isn't in a massive free fall, this inflation that we're seeing for now, it can be considered transitory, regardless of how permanent it is or not, because they all know eventually this whole thing is just going to absolutely fall apart. So don't worry, when the Great Depression comes, things will get cheap again, you guys. Don't worry. It's transitory. But until then, these prices are permanent. So it's not like the economy is going to get up and roaring and doing really well and all these prices are going to drop. The value of the dollar is dropping. The purchasing power of the dollar is dropping. The cost of a container is $10,000 to $20,000 to import, just for the shipping costs. It doesn't include all the other things, including duties, chassis, bonds, and the actual physical container, which is now, $3,000 to $4,000. All these prices are going to be put into the goods as they reach the end consumer. And I saw Danielle DiMartino Booth share this thread, and I thought it was really good, and I thought it'd be informative for all of us to read to kind of get an idea of what's going on behind the scenes. From at 21SATCH over here on Twitter, a quick thread from my somewhat unique perspective. I analyze pricing for a multi-billion-dollar holdings company that owns 20 plus subsidiaries. Our brands manufacture components for many types of machinery and equipment used in several industries. O&G, mining, food and beverage, farm, packaging, construction, material handling, etc. O&G is oil and gas. The raw materials and subcomponents used in our products have obviously been increasing in the price over the past year. That being said, essentially all of our subsidiaries have chosen to stomach a majority of the higher costs in order to remain competitive until very recently. Over the past weeks, a vast majority of our brand managers have contacted me, either asking for assistance in raising prices or notifying me of planned price hikes. Most now believe that costs will continue to remain elevated and rise in the medium term and will not be transitory. They've cited discussions with raw material producers, supply chain issues, but most importantly, the recent change in narrative from transitory inflation to trending inflation. Most thought that they could eat short-term cost hikes, but their thinking has evolved with the narrative. So if you understand that, right, if there's a lot of people who are stomaching the cost, producers, manufacturers, retailers, stomaching these costs, thinking that they were temporary, they have now all just been told that these are permanent. And so if they've been the ones stomaching the cost of the inflation, they now know they can't continue to do that for forever, and they have to pass that cost on to the end consumer. So managers whom I've spoken with have been asking for help in modeling price increases. Because our subsidiaries operate mostly autonomously, some competing with others, I can infer that conversations of price hikes are probably starting to occur across the broader market. A majority of our customers are major OEMs that supply both industrial end users and consumer-facing businesses. Essentially, the rising costs of inputs haven't materially affected the OEM level yet, but they will soon. Once higher costs reach the OEM level, I expect these to be passed on to end users and consumers relatively quickly with price hikes of their own, which tend to be much stickier than those that are higher up in the supply chain. The point is, even if you think we've seen the highs for monetary and fiscal expansion, the lag in price hikes throughout the supply chain has made it so price expansions haven't yet had a material impact on the users and consumers in the markets we operate in. The transitory narrative seemed to be a widely held belief until the past few weeks. Major producers are now thinking otherwise and changing their pricing strategies accordingly. I am presuming that our companies and markets are not the only ones experiencing this kind of delay. I wouldn't be surprised if inflation remains elevated for longer than most expect, and I wouldn't be so confident that the year-over-year highs are already in. Again, this is just my perspective. It may prove to be immaterial, but I thought it was worth a share. So we couple in all of this stuff, right? First of all, there's a big argument between whether or not the US dollar currency index is directly related to actual inflation, or is the US dollar currency index just a measurement of the value of the dollar in relation to other currencies, right? Baskets of other currencies. How is the value of the dollar holding itself up? Which is what it really is. But the reality is we saw the value of the dollar fall over 10% in the course of 2020, from its peak to its trough, falling a total of 13.38%. It actually found its bottom right here on January 6th of 2021, but the inflation narrative and the inflation showing up in consumer goods wasn't noticeable to anybody until 2021. But now everybody's aware of it, right? And based on what we just read right there, all these companies deciding that they're going to have to hike up their prices, and all the things that we've looked at in regards to shipping container costs and how much it costs to import and supply chains being disrupted, and that there are no signs yet that it's about to wane. If we saw container shipping costs fall from where they're at right now and say get cut in half, then you would say to yourself, oh my goodness, in the future, we're looking at a pretty big reduction in costs for shipping for products. That means that the profit margins will increase. That means people are going to get more competitive and prices are going to start falling. But so long as the costs are still rising in container shipping costs, and we know that there's about a 3-month lag between when somebody places an order and it actually arrives and it's available for consumers to be sold in the United States, we have to assume that's forward-looking inflation that we'll have in just a couple of months from right now. So there's no signs that inflation is going to wane throughout the rest of this year and that inflation will continue throughout the remainder of 2021. Also, from a technical level, we can see that the US dollar currency index is just teetering on the edge of going down for a big, massive plunge to the downside. Crypto has also been in a really big bull run up until this point with a really big pause right now. I'm still expecting one more big push up in crypto. But if I had to like kind of imagine what it would look like, right? So I'm imagining the top coming in, right? Imagining what the end will look like and what the narrative will be like if it happens here in the year 2021. Because what we know is that all the things around us in the real world will feel very different and it won't feel like making the right decision. When I decide to sell, I am expecting that it's going to seem like the dumbest thing possible. It happens every time. Every time I say that I'm making some type of exit, I get told that I'm a dummy. Every time I make a buy, I get told that I'm a dummy. And it's because I'm doing opposite of what the narrative is and what everybody else is thinking is happening. And so I'm imagining what would happen here, right? Inflation keeps soaring. The Federal Reserve is saying inflation is real. At the same time, the US dollar currency index breaks below its last 7.5 year pricing, and we see the lowest fall in the dollar, right? The dollar is starting to fall. Remember, there's no legitimate, hard to say legitimate, or at least I haven't found it yet, that just because the dollar is falling right here doesn't necessarily mean that that's directly related to the actual inflation that we're seeing at this current moment. There's this lag delay, right? But from a technical perspective, my anticipation has been that the dollar will keep falling. And then at the same time, the narrative is inflation is real, inflation is real. And unlike during this time period where people weren't feeling the actual inflation, in here, we're all now feeling the inflation of what happened in here. We haven't yet felt the inflation of what happens in here and with the devaluing of the US dollar yet, but everybody sees the dollar falling. Everybody also feels the inflation that's been happening. Christmas is coming. Everybody's fighting over getting those containers and getting the products in the United States. Everything's higher in price. And at the same time, the news narrative is that the dollar has reached its lowest price level in the last 7 years. And the Federal Reserve has indicated that the permanent price increases that we're seeing, or the transitional or transitory inflation that we're seeing, those prices are permanent. What happens, right? Everybody's just panicking. Everybody's just panicking over dollars. You see the dollar falling, you feel the inflation happening, you hear the narrative. Everybody's saying, don't get into dollars, run away from dollars, be afraid of dollars. And I think at that point, for me, that's where I buy the dollars. When everybody is totally afraid and think that dollars are going to collapse to zero. Because at that point, we will have completed an ABC correction. And typically, at the capitulation moment of the C wave, it's when a complete loss of faith in an asset has happened. And I'm trying to imagine what the narrative will be like. And the narrative will be like, we'll all physically feel the actual inflation. The news narratives will be the dollar has broken support and is in a free fall. The Federal Reserve will have stated that the transitory inflation that we've already seen is permanent. And for that, retail consumers and retail investors will all FOMO panic buy into commodities and cryptocurrencies and everything all at the same time. And that will be the time for me to start letting go. Now, the funny thing is, this has been a price target for me for the US dollar currency index way down here since I started my channel in 2019, which is about 80 for the DXY, way down there at that support level. And at the same time, for Bitcoin, it has been my belief that this would be our price level that would hold down here for Bitcoin as well as we've been in this correction. And one of the interesting things you can see about Bitcoin and about the US dollar currency index is you see the exact same distribution that is happening here. You see the three rises that happen in here with the break and the retrace. You see the three rises that happen in here with the break and the retrace. And what has it done right now? It has come back down to the support level for the US dollar currency index right in here, just like Bitcoin did back in here, right? You can see how it came back down to the support level, bounced around a couple of times, but then it was once it got through there where the real fear and the real panic for Bitcoin came in as it came down to the support level right in here. And that's kind of what I'm expecting to see happen for the dollar, is that we have gone through distribution over in here. We have had an ABC or A, B, and we're working on C right now that will take us back down to this price level. So for those who have been with the channel for a long time, this price level, 80 for the DXY, has always been my area of interest for the dollar. You can kind of see how that played out exactly over here on Bitcoin for that particular price level. You can see how it did have to fight through this after the distribution had happened, or the ABC as it was working on that C leg to break down below that A, which is A, B, C. Notice as it was trying to break through A, it really had to work through this area. That's been my opinion of what has been happening here in the US dollar currency index, and that we do see a massive fall in here. And then tie in all the inflation, all the other stuff, and the narratives and everything that goes along with it. I think all of this is positive for cryptocurrency. It's not positive for the country, right? It's not positive for where I live, right? A lot of people are going to be in a very sticky situation, especially people who are on fixed incomes. It's really unfortunate for a lot of people. It's fortunate for us because we noticed this way ahead of time, and I positioned myself into assets preparing for this ahead of time. But I don't think it's going to be a very pretty moment in regards to narratives and how people react to all of this. I think people are going to be very upset about all of this with the actual physical inflation showing up in front of them, mixed along with the narrative of hearing dollar has broken 7-year support. But what's my whole point of all of this? The whole point I'm going through all of this, one, I'm still a bull on cryptocurrency, and I think cryptocurrency is going to go up. And my macro picture of what's going to happen here in markets is that we're going to see the dollar fall. And with that, in the last two big runs that we've seen over here in crypto, these were during moments in time where the dollar was falling very strong. And that I still believe that the dollar is in an ABC correction and it will fall and we'll see crypto rise during that time period. But I'm also showing that my belief has been that this would happen. And what does that mean? That means that I would be buying dollars at the ending phase of this. And I'm mentally preparing myself for what the narrative will be like at that time. I don't know what the narrative will be like at that time, but I can try to imagine it ahead of time so I'm not sitting there joining big herds of people saying I have diamond hands and laser eyes, but instead I'm understanding this was what I expected. This is what I thought society would be like at this time. I'm getting all those signals. Everybody's mad. Everybody's upset. Everybody's saying run away from dollars. And this is the end of the C correction. This is the end of the ABC. It's what I expected. Everybody's capitulating. It's time for me to get in. So will it play out like that? I don't know. It's my best guess, though. And when we tie all those things in, like to what we've been talking about with the total market cap of all of crypto, then when we've had these moments like this happen in previous cycles, that this market does break up one higher time. And that would make logical sense if the US dollar currency index breaks below its support, cryptocurrency market breaks up higher. And as we've been looking at the cryptocurrency market, expecting one final really big push to happen in crypto, and it would make sense that there's this one big final fall over there in the dollar. All these things combined, these are the kind of things that I try to look at from just a big, huge macro perspective, and all of it still ties into me and points to me that the cryptocurrency market goes up one more step higher, and it's the big final blow off moment. It's that moment where everybody capitulates on their US dollars and FOMO buys cryptocurrencies after the cryptocurrency market has already risen a tremendous amount of time. And it'll be at that point where it seems most likely to me that a lot of the money printing will cool off, a lot of the stimulus stuff will cool off, a lot of the unemployment stuff will cool off, and just the free printing press will calm down at that time. People assume it will go on for forever. It just can't go on for forever. It's got to stop at some point. And we're all having to kind of make our best educated guess on when that will be. But for today, price action still pretty close to what it was yesterday. You could see there on Bitcoin, there has been a 39-cent price change since yesterday on a $40,000 asset. So prices are pretty lackluster today, and we'll just kind of have to wait and see what's happening up here in these resistance levels. And hopefully tomorrow we'll have a little bit more information to discuss the day-to-day price action. But today, for me, it's just a wait and see. And I hope that you kind of enjoyed my bigger, broader perspective view. But all right, that's going to wrap it up for this one today, guys. I hope that you're having a great week so far. If you'd like, you guys can check out my website over here. This is bcbacker.com. It's my course where I deep dive into the previous Bitcoin bull runs and the different altcoin market cycles, tying them all together to show how the previous Bitcoin bull runs and the alt seasons have worked in the past. I teach you how to set up your own charts and your own indicators in TradingView and kind of walk you through all the different indicators in there that I look at, talk about mathematics and percentages. And you can check all this out over here on bcbacker.com. You can follow me over here on Twitter at bcbacker. And I want to thank you guys so much for watching my channel. If you could, please like this video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you can be notified of when I create new content and when I go live. As always, this is not investment advice and I am not a financial advisor. But if you ever need a pick me up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.